So welcome Sean back again for round two. Thank you everyone for joining us. This week we are going to be focusing on order flow. I know that Sean has a lot to tell us, so let's get straight into it. Thank you for joining us again, Sean.
Awesome. Thanks, George. So guys, welcome back again. And as Jordan says, I've got a lot of information to cover. So really, this is really just an introduction to order flow, market structure. And last week we covered how I draw my levels, monthly, weekly, daily. I covered a little bit of the value areas. I covered some of fibs. I covered market structure. We looked at a little bit about footprint charts and looking at TPO charts. But I want to start out this week by just going over value areas and fixed range, because I saw Vanner actually posted a question, I think it was earlier today or yesterday or over the weekend, about what the significance of the POC is, what the significance of fixed range is, what the significance of the value area high, value area low is. So basically, if we have a look at a chart, we can't really see where the volume was actually transacted on the chart. If we look at this chart, we can see, yes, there's wicks up there, wicks down. There was a big drop from 28,000 down to 21,000. And we can see that we traded in a range there. But the question is, where was most of the volume transacted during that period of time? And this is where fixed range comes in. And this also starts playing a huge role in when we start looking at TPO charts, when we start looking at the footprint charts and so on. And obviously, the footprint charts or the order flow will tell you where exactly is the volume transacted. It will tell you, because if we look at this candle, we can see, yes, there was big candles down, but where was most of the sell volume taking place? Where did the buyers open? Were there buyers trapped at the top of this candle? And guaranteed there were, because this move down probably wasn't solely just shorts opening up. It was probably longs closing their positions as well. So with that, what I'm going to do, I'm going to quickly draw a fixed range in a couple of the ranges, just so that we can see where the volume was transacted. And if I come back to my little theory here, right there, it says POC shows where most of the volume was transacted within the range. When price comes back to the POC, POC stands for point of control, it is the most likely area to show support and resistance. The wick is when new money is likely to come in, and we'll show that on the chart as well. So the POC will be where the previous traders are getting out. And I'll explain why. Have a look here. If I go and pull my fixed range, so remember on the chart, we click on this little area and we go and select a fixed range volume profile. So I'll use this range that we were in from the 12th of May till the 7th of June, because it's a nice range. It's very difficult to use the POC in value areas when we have drops in price. So the question is, where do you draw your fixed range from? Yeah, you can see we were trading above this range. Here we had a range here, and we broke the range. So at this point here is where the range would have ended, right there. You can see there was kind of support there, and on that candle the range broke, and we started a new range over here. You can see there, and we traded in that area for quite a long time. So I would draw my fixed range from the start of the range of the candle. And obviously, when this price drops into this area, you don't know yet where the range is. So you've got to give it a little bit of time to move, see where the ranges are forming before deciding where to enter a trade. And obviously, you can use historical levels, and I've charted my levels here. I can switch them on so I can see, okay, we came to this weekly level, we touched, we broke it, we tested it as resistance, and there we had a new range forming, and there's our daily level coming up, and so on. Okay, so let me just turn off all of those. Then I can start by drawing that fixed range. So we go to our, sorry, let me just move this chart. So we go to fixed range and draw it from the start of the drop of the first candle right to the end, or where the range actually ends there. Okay, and as you can see, what it does, now instead of just you having a candle up and down, you can see where the volume is trading. So you can see there, I think if I remember correctly, the blue might be up volume, the yellow is down volume, could be the other way around. We can actually click on that and go settings. Let me just double check. Yeah, so your up volume is blue, the down volume is the yellow. So the blue would be buys or longs, and the yellow would be shorts or sells. So there we can see that red line is where the point of control is. That's where the most volume has been transacted within this range. And why is that important? Because look at this. See how price has come down. It's probably gone down to a daily level there, come past the point of control, hit the value area high. That's the blue line there. The bottom blue line is the value area low. And you can see how many times it's come back to that point of control. And the problem is that most retail traders trade the middle of the range because they don't know where the support and resistance areas are. So if I turn on my levels, yeah, you can see I've charted my weekly level there. There's a resistance there. It's come up and tested that resistance a couple of times. So you normally short where there is a resistance, and you short where there is a value area high. So, and that is why I go and mark these value area highs on my chart and the value area lows. So once again, guys, if you missed the first session, go and watch the first session. I think it is pinned onto the channel. It's also on my YouTube channel. I've put it there. So here you can see, if I now go and turn off this fixed range, if I pull this value area high, there you can see how many times it's come and tested that value area high once, twice, 3, 4, and then it broke out, came back, and look when it came down. It actually tested that value area low. No, sorry, not quite at the value area low, but it came back up, tested that value area high as resistance. You could have taken a short there, down to the bottom of the range, and so on. So I just want to close some of these windows because my machine is seeming a little bit slow for some reason.
No stress. We've got some beautiful questions here coming in. Thank you, everybody.
Okay. Awesome. So, come on, man. I'm going to make that a little bit smaller. Sorry, guys.
I must say from my side, this volume range is very important because it's really not fun to be in a trade in the middle of some kind of volume range like this, because you'll see your trade go into profit, into loss, into profit, into loss, and it's this emotional roller coaster where you could literally, have your buys and sells at the bottom and the top. And I mean, after endless, watching YouTube videos, learning how to trade TA, one of the most important things is entry points. Are you entering at support? Are you entering at resistance? Are you entering at the top of the range or the bottom of the range? And if you're in the middle of the range, even if it's an RSI range, just don't enter, because you're asking for an emotional roller coaster. So thank you for that.
Exactly. So, and why there's a lot of volume that's been transacted here is because when people enter at the middle of the range, let's say they took a long here, and all of a sudden the price went down to the value area low, their position at this point was in deep trouble. So they might have held that position and hoped for it to come back at the entry point, which might have been at the middle of the range. They see price come back here, and if the price had gone there and they were minus $100, minus $200, or whatever the case might be, negative P&L, and price came back to the entry, they would be more than happy to close that position out for zero profit, but also zero loss. So that's why you see a lot of volume transacted at this point of control, is because people, as Jordan was saying, enter at the wrong place. They're not entering their longs at support, and they're not entering their shorts at resistance. So let's go pull another fixed range.
We've got a question here from Foray. He's asking, what is the minimum number of times price must test a value area before we take a trade?
That's very subjective. Over here, the more tests of value, the weaker, or the more tests of value, the weaker that level is going to be. So I just want to pull this over to this side real quick. Give me a sec, guys.
Yeah, so just like support and resistance, the more times those lines are tested, the more likely they are to flip.
Yeah, exactly. I was actually downloading something there. I think that's why my PC was so slow. Okay, so exactly. So the more tests a resistance or a support, the more likely it's gonna actually become a lot weaker. So I can't answer that question because every single time is different. I mean, look at this range. Over here, we had this value area low tested once, twice, 3, 4, 5, 6, wick down, came back and reclaimed it, and then we traded in this range. So in this range, it tested that support multiple times before it broke down. Whereas if you look at our charts, I'm just pulling this up again.
I mean, this is often a feeling when you see that a support has been holding for a certain amount of time and you can actually see the exhaustion in the candles and in the support line. You get this feeling that that support line is no longer going to hold anymore. And a lot of my
Correct.
best trades are on that kind of feeling where you're just watching the markets for a certain amount of time. And then, you know, the candles give you a pattern. They give you a story. And if you see that story playing out in a certain way, just like at 28,000, when we were just bouncing, and each bounce on the 28 was just getting smaller and smaller. I just got a big feeling, you know, entered a nice little 5x and I'm still in it. So the gut feelings are often there, you know, especially if they've driven from these sort of pictorial. It's a story. It's always a story, and these things are predicting it. I mean, that it's kind of drawing out, predicting the end of the story.
Correct. So in contrast to our previous range, where we ranged there for quite some time, I mean, we had support and resistance touched so many times. This little, where we broke down from 28,000 and went all the way down to 20,000, you can see here, we traded in that little range only for about 3 days. So to have a hard and fast rule to say, okay, if it touches it once, twice, 3 times, then I can trade it. No, you've got to look at the levels and decide when it reaches that level. Is this bearish? Is there bullish price action? You've got to look at the volume, and you're going to talk about volume as well, because volume often precedes price. So if you look here, your volume is a free indicator. And that's basically what is going to drive a market. If I have a demand for, let's say, petrol, that's a good example at the moment, because petrol is very, very expensive. It goes more expensive because there's a demand for it. And there's a short supply of it because of current market conditions. So what happens? There's the demand pushes up the price. And when there's maybe when the war conditions are better and the more economic conditions are a lot better, what's going to happen? There's going to be an excess supply, not as much of a demand, and the price is going to go down. And it's exactly the same with the charts. So when volume comes in, you'll see there's an extra demand for possibly shorts in this area here. If you look here, as we had price coming down, we had the volume increasing. Have a look there. And I'll give you a little cheat sheet on how to look at volume as well. But just pulling our fixed range from where this range broke down, and we started having a little range. and to where it broke down again. Actually, we can pull it probably all the way to there. Here we can see exactly where the volume was traded. So you could have taken shorts at that value area high, possibly taken profits at that point of control. You could have taken 1 or 2 longs just below the value area low. And here you can see I've got a daily level that comes in right there where these wicks came down. So your fixed range and your point of control and your value area highs and lows is really an indicator of where you should enter the trade, as Jordan was saying. And your value area high and your value area low, very, very important. Why? Because generally you can take a short off the value area high and a long off the value area low. But also you need to look for points of confluence. Make sure that your fibs are in place. Make sure that it lines up with your chart patterns. Make sure that it lines up with your levels and so on. So one thing I didn't discuss last week is the confluence of chart patterns. So I'm going to look at quickly right here. Let's turn off this fixed range there. And I'm going to turn off that trend line. That one will turn off. And okay, let's zoom out to the daily. So if we look here, guys were asking me on the group today, saying, you know, looks like we're having a bounce. But the point is that the chart is telling us that we've had absolutely zero signs of strength at the moment. So you can see here from the high, the all-time high at 67,000, we've had lower highs, lower lows, lower lows, lower highs, lower lows, lower high, lower lows, lower high, and a lower low. So at the moment, we've got a massive trend line, kind of a descending wedge or a falling wedge that we can draw here. And yes, it is possible that if we get a bounce and things start turning a little bit bullish, we could get a bounce and see it go to the edge of that trend line. But what I found quite interesting is the lower trend line. When I drew it, I noticed something. Have a look here, how it's acting as a resistance when it's broken down. So I'll turn on to my 4-hour chart there. You can see today it's been acting as a resistance. So that for me is a confluence together with my levels. So if I turn on my levels, there you can see I've got a 4-hour level that's in confluence with my chart pattern. That's also in confluence with a fib, if I had to pull a fib. So if I pull a fib from that swing high here to the low, there you can see, there we've got our golden pocket retracement. So I've got 3 areas of confluence. I've got a 4-hour level that it's rejecting at. I've got a chart pattern that it's rejecting at, and I've got a golden pocket that it's rejecting at. So this point of 21,000, between 21,200 and 20,800 is actually acting as a very strong resistance at the moment. So if we break through this point, we come and test this previous higher high, and we could possibly go up a little bit higher. And market structure is extremely important. So, okay, any questions as we go move on to the next section?
Yeah. Very interesting. Thanks, Shawn. There's one question here from Ufuwama. I noticed that there are sometimes a lot of market manipulation around areas of value, such as stop hunts and the rest. Is there any way we could add more predictability to our trades when trading around these zones?
Yes, there are definitely stop runs, and that's where the order flow and TPO charts come in tremendously, because since I've actually started using them, I can actually see where the stops are being put. So to give an example today, I was looking at SNX. And I actually went and placed, it didn't save my, where the stops are. But here you can see, when I was looking at it, I entered a short, and I put a zone here, because you can see where all of these candles here, and if a person goes long here, that's where the stops are going to be. So the best thing would be to take a short here at $3. I entered a little bit late, so I put my stops into profit. And basically, when it hit the zone, see how quickly the price moved down there? It's because a lot of people placed their stops there. So, and obviously we had a reversal there, and we can see these wicks here going up there is possibly long stops being hit. So when the long stops get hit, there's no place where people are interested in selling here anymore, so the price moves up very, very quickly. And it's very important to know those areas. So yes, as we get into the order flow and that kind of thing, you'll actually start seeing where people place their stops, and you'll actually see as you get into a trade. If I got into a trade here at $3 and I got into a short, I would see, okay, price is coming down here as it hits the stop area where people are most likely to place their stops. If the price moves through there, should I close my position out or should I hold it down lower? And here you can see we had a wick up. That meant that obviously price was gonna move up. That was quite a bullish sign at that point. Hope that answers your question. Okay, so with that, I think let's move on a little bit. How are we doing for time? Okay, sure. We're actually getting quite into the time. So I'm gonna skip this this section. Maybe we can cover that in another session once we do that. So, but I want to start covering open interest and volume specifically.
Just one quick note before you continue. Since this volume from Davy Jones, since this volume profile that shows this POC is not free on TradingView, is there any other indicator that shows the POC around an order block?
It is free on TradingView.
Okay.
It is free on TradingView. So if you go and click on indicators and you type out fixed range,
yeah, I thought so. That's the one that I use.
Volume profile. So I'm on a free TradingView account, and you can use this on a free TradingView account. It's absolutely priceless. So VP, VR, and other volume tools you aren't able to use on a free account, but fixed range you definitely can.
No, it's a great indicator. Also, the way it's very specific to your time frame, it works so well. So thank you, Davy Jones. Do go and test it out. Sure, and thank you everybody for being here. Such a lovely turnout. Wow.
Awesome. Thanks, guys.
Okay, let's keep going. Loving it.
Right, let's keep going. So open interest, volume and open interest work very much hand in hand. And I actually got this from Investopedia. I'm going to make this document available so you can go and look at this, go over the stuff, look at the videos again, and really solidify these concepts in your head. So volume, which is often used in conjunction with open interest, represents the total number of shares or contracts that have changed hands in a one-day trading session. The greater the amount of trading during the market session, the higher the trading volume. So a new student to technical analysis can easily see that the volume represents a measure of intensity or pressure behind the price trend. According to some observers, greater volume implies that we can expect the existing trend to continue rather than reverse. And we're going to look at examples of that. Many technicians believe that volume precedes price, and I really believe it does. They think that the end of an uptrend or a downtrend will show up in the volume before the price trend reverses on the bar chart. Their rules for both volume and open interest are combined because of similarity. However, even supporters of this theory admit there are exceptions to the rules. Now, it doesn't work 100% of the time, but a lot of the time it really does. So what we can see here, if we look at the Bitcoin chart again, we can see, and I often use this in my trading, we can see as price starts dropping, let me move that out the way, price starts dropping here, we have a huge spike in negative volume. Then we have a bit of a drop off in volume, and you can see that the volume starts dropping off. So if we can even draw a little trend line from this volume to there. And you can see as the volume starts dropping off, that means there's less interest in these prices, and all of a sudden you've got a very big positive volume candle, and we had a quick reversal there. Then we had volume drop off again. You can see there. That shows me it's the end of that little trend, and we've got a bit of a reversal happening there. Volume going down. We had volume then going up. You can see there. Volume going up to the negative side, and we had a dump there. And obviously you can drill down to your 5 minute, your 3 minute to see these little volume trends. But especially in a big move, like here, we had a very, very sharp move to the upside. Okay. And people were probably getting in at the top here, but look what happened to the volume. But a very big spike in volume on the 30 minute, and all of a sudden volume went right down. So as volume started decreasing here, we actually had a reversal in price. So I often use this in conjunction with open interest to see where the trend is gonna start reversing. And you can even drill down to the 5 minute or the 3 minute or the 1 minute if you're looking at reversals. And here we can see we've got a big volume spike there. And okay, we had a bit of an increase in volume, and you can see the price trend going. Then all of a sudden, a big negative volume candle and price going to the downside. So, and by the way, this range to trade for Bitcoin is very, very difficult at the moment, I must say. So I've actually been looking at a lot of the altcoins. So coming back to volume and how to read volume, use this little cheat sheet. So if price is rising and volume is increasing, that means we have a strong uptrend. And if we look at the price on the charts, where we had, I'm going to go to the daily candle and look where we really had Bitcoin pumping, because you can actually see here. You can see where this price was increasing exponentially. Look what was happening to the volume. So price is increasing, volume is increasing steadily. You can see by these green candles going up until we had a very, very big negative volume candle there. So that was a very strong uptrend. And if we break it down to the 4 hour, you can actually see the volume candles at a far more detailed level. So, come on, man. Sorry, guys. For some reason, my screen is reacting very, very slowly.
Probably, I think, a little bit of network connection, but no worries, it is working out. An interesting thing here, I have a question from Akalamore. Aren't volume indicators lagging indicators? How do they precede price?
Well, it's like pushing, imagine you're pushing a car uphill. If I am pushing a car uphill on my own and it's only me, then what's going to happen? The car's probably going to push me down the hill. If I get a second person to come in and start pushing, it's going to be, the movement down is going to be a little bit slower. If I get 3, 4, 5, maybe 6 people pushing at all of their strength, that car is going to start moving slowly forward. So volume,
and it is pretty instantaneous. I mean, you watch the volume coming in. It can really help with your trading, even to open or close a position. And very often you don't even want, if you're scalping, you don't even want to be opening a market order if you're not actually watching the volume candle going up. Correct.
So volume is definitely not lagging. I would say the RSI is lagging. I would say MACD is lagging. A lot of those indicators are actually lagging, whereas volume is instantaneous. So if I go and open up my imbalance chart here, I can see where the majority of the buys and the sells are happening. Where's my Bitcoin chart? There's my BTC USD. So this is a footprint candle. This gives me exactly where the volume is being transacted. And if you look at this big red candle, there's big sells, and here's the delta. Delta is your your buys minus your sells. And if you have a negative delta, it means that the sells are outstripping the buys. If you have a positive delta, it means the buys are outstripping the sells. So for me, this is definitely not lagging. Look at the delta here, 4.6 million negative delta, and our volume was 3.1 million. And here we can see the volume exactly as it's happening. And so if we then reach a point of support, and the delta starts turning around and the open interest starts turning around, the volume starts going up, then there's an indicator that there could be a reversal and the long could be on. But I would only look at doing that at support. Okay, so literally, if the price is rising, volume is increasing, we have a strong uptrend bullish. So inversely, where price is rising and volume is decreasing, we have a weak uptrend. Like I said to you, I often look at where the volume starts decreasing because I know the trend is going to come to an end and we could have a reversal, and that is actually bearish. So if price is declining, volume is increasing, that means we have a strong downtrend, bearish. So in other words, where we have these candles here, you can see volume was increasing and it was negative volume. If I look here, most of these candles in this region are actually red candles. And here you can see we had the price decreasing. So if you got into a short here and you started seeing that the negative volume was increasing, and if you looked at your footprint charts, you would have seen that the negative delta was increasing, and it's like pushing the car. Many market participants were selling, and that means it just forced the price down. And the market is going to really move in the direction of the strongest buying or selling force, and that really is a fact. Okay, so looking at open interest, and we're going to look at some open interest charts as well. Open interest is bullish if we have increasing open interest in a rising market. So what does that mean? Increasing open interest in a rising market means that more longs are opening. There's more interest coming in, new money is coming into the market, and it's pushing the market up. So if we look at a open interest candle, and you can go to coinalyze.net and close and open that so it's a full screen. So we go to coinalyze.net. This is a free tool as well. You would type in your instrument, BTC/USD. And what you're wanting to look for is you're wanting to look for the perpetual chart. So I always use Bybit perpetual. I really, not just because this is a Bybit stream, but I don't trust Binance's data. I seriously don't. I've often been looking at open interest and I'm seeing, but this open interest is not adding up to what the price is doing. I go to the Bybit chart and all of a sudden everything makes sense. So yeah, just a little word of warning. Okay, so you open up your chart and you can see here, it actually gives you buy and sell volume. You can keep that open. I normally close it. You click on add extra data and here it gives you the open interest. It actually gives you all the liquidations as well. So right here, you can see all three things that I've been talking about. There's your volume, there's your open interest, and even your liquidations. This red candle here means that longs were liquidated. So as price was moving down, yeah, you can see open interest was kind of rising. And to be honest with you, I wouldn't be trading this because it's just not at a level that I want to be trading at. But let's go back to, here's actually a very good example. So here, right at kind of where support is, $19,800. This might have been a good place to long, because look at this. Number one, you had volume increasing on the 5-minute chart, and your trend was going up. So that means that there was a strong uptrend. Also, you had open interest increasing. That means that people were interested in trading this, so new longs were coming into the market, pushing the market up, And all the way here, you could see open interest was rising with price, rising with volume, up until we got to that resistance area. Remember, we said that the resistance zone was 20,000, 21,000, and we had a big wick down, and that normally is shorts closing. And you'll see also on the footprint chart, when a lot of the time when the shorts are closing at the top of the candle or at a resistance, there's no actual sells to come in and counteract those shorts closing. Because remember, short, when it closes into a long position, but there's no sells because nobody's interested there's no buys, and there's no opposite market participants. But as you can see here, again here, we had a very quick drop in open interest. We had a drop off in volume, and we had a price decline there. Okay, so moving on to, as I said to you, you guys are going to have to sit with these things. If this is the first time you've actually seen this, sit with this little cheat sheet. Look at the price. Don't trade this until you've actually understood how it works. So a bearish scenario in open interest would be where there's declining open interest in a rising market. So what would that mean? That would mean if open interest is declining and the market is rising, that means that certain trades are closing. That's why the open interest is declining and the market is moving up. So let's go look for an example in the charts there. So let me just see declining open interest in a rising market. Let me go look for an example. Yeah, there's a very good example right here. We can see right here, we had the market rising, very, very short little rise, but we had declining open interest. So what does that mean? It means that shorts opened here. As the price was rising, they saw that they were starting to get underwater, and they started closing their positions. That's why there was a decline in open interest. So that is actually just showing you that the shorts opening here, when it re-enters as in long, so it actually pushes the market up a little bit more rather than pushing it down. When that open interest starts, then when the shorts stop closing, then that is showing a reversal in the market. We had an open interest increase, and we had a little increase in price there as well. Okay, then the third scenario is that we have a bearish indication when there's increasing open interest in a falling market. Now, this is extremely bearish. This means that there are new shorts opening when the market is decreasing. So let's go to the 30-minute, because we'll be able to see it probably here.
Shawn, just show us one more time how you got that open interest BTC USD per
Sure.
bar.
I'll open a new screen, Coinalyze. We go in the search bar, and you can see I'm not even logged in. Go to the search bar, BTC USD. Right. I'll scroll down, and I actually think we could say, no, I can't. So scroll down until you find USD perp, because the perpetual contracts are the ones that show the open interest. So remember, on spot, if I go to, let's see, I actually think it must have Bybit on spot. So if you go to just this kind of chart, you won't see the open interest, because it's not a perpetual chart. It's not leverage tokens. So must be a perp chart or perpetual chart. Click on that. Opens up your chart. So they've put a shortcut in there. Just click extra data. You can also go to indicators. Click on the indicators and type in open interest. And click on open interest, and it will show you. I can also then go and type in liquidations. So I can have longs liquidations separately, short liquidations separately, or I can have liquidations altogether.
Okay,
So,
amazing. So very important. It must be the perpetual, or those indicators won't work.
Must be perpetual, because you won't see open interest data on spot charts or on a spot coin. So you'll
Awesome,
notice.
thank you.
Yeah. So if I go to, so Bybit actually on TradingView doesn't have a difference in spot and perpetual, but if you go to a lot of the other exchanges, you'll see they'll have a USDT perp. Well, they used to have USDT perp. Okay, they don't have it anymore, but they used to have a USDT perp on the end of it, and I think these might actually just be the perpetual charts anyway. Okay, so coming back to that chart, instead of clicking or going to open up all of these indicators individually, you just click on Add Extra Data, and it loads it all there. It actually puts the funding rate, but I normally don't use the funding rate there. Okay, so where were we? Does that answer the question?
Yes, that's awesome. Thank you.
Okay, cool. So bearish, increasing open interest in a falling market. So when there is open interest increasing, like when we had this drop here, initially, have a look at this. This is why I was saying the other day that this initial drop from 20,000, and even if we looked, if I remember correctly, from 28,000, it was a lot of people closing their positions in fear. It wasn't actually new positions opening up. Yeah, right here we can see. We had that huge drop. We lost that level of 27,300. And there we can see, big drop. But we didn't have an increase in open position or open interest. That means that there weren't new shorts opening up here. That means people were in fear and they were closing their long positions. So if you have people closing, there's a drop in open interest, and you can see it here. Big drop in open interest all the way down there. But if we look at, these ranges here are actually not a good indication, because lately when we've had a drop in price, it's actually not a lot of new shorting opening, but it's more people that's been closing their long positions. I think I'd have to go a little bit further back in the chart to see open interest increasing and price dropping to see where shorts are actually opening up. Let's see there.
It's quite interesting to see how the open interest is actually an oscillator, which is always going up and down.
Very much, and it works very much in conjunction with, So, I mean, here with a bullish trend, you can see there we had a bullish trend up there. Open interest increased, and the bearish would be the opposite. So I just can't find any examples here of open interest increasing and price dropping. There you can see again, drop from 31,000 to 29,000, open interest decreasing. So that tells me people are in fear because that wasn't new shorts opening. Okay, here's actually a good example. This is a case of new shorts opening. You can see here how the open interest increased from this point to that point, and there we had a very strong downtrend. So you can see as the trend goes down, the open interest increasing. That tells me that from 30,500, when it reached that resistance, people are opening up new shorts, and that is what drove the price down. And then we have the last scenario with open interest. It's bullish if we have declining open interest in a falling market. Why is that? So if we have declining interest in a falling market, it means that that the longs are actually closing out. So yeah, we can see decline in open interest because the longs were closing out. They were scared of their positions, and we had a little reversal there. So, and again here, there you can see. Sorry, that's not a falling market. Yeah, the last couple of days is quite a bad example of that, and maybe Bitcoin is a bad example to use with that. But I would suggest take these little cheat sheets, go and look at the chart, look at what open interest is doing, see what price is doing, and see what volume is doing. Okay, so and the scenarios I've put here: price action increasing during an uptrend, and open interest on the rise are interpreted as new money coming into the market. That reflects new buying, which is considered bullish. If the price action is rising and the open interest is on the decline, short sellers are covering or closing their positions and are causing the rally to go down. Money is therefore leaving the marketplace, and this is taken as a bearish sign. If prices are in a downtrend and open interest is on a rise, some chartists believe that new money is coming into the market. They think that this pattern shows aggressive new short selling, and they believe that this scenario will lead to a continuation or a downtrend in bearish condition. And there you can see I've actually given you a cheat sheet as well. So I think what I'll do is I'll put this document on Google Drive or on OneDrive, put a link on either the Bybit group or put a link on my channel so that you guys can download this and you can actually use this. And here, this cheat sheet here tells you what is happening when volume is involved as well. So, okay, I see we've got about 10 minutes left. So I want to spend the last 10, 15 minutes on TPO and order flow. So that TPO and order flow is what I've been showing you here. So we can see we've still got a negative delta happening here, but still in the middle of the range. I wouldn't trade this. So we probably see price still push down. But any questions that at the end of this section, Jordan?
I think let's keep going. Let's get through the important stuff. We'll take 5 minutes towards the end. Beautiful.
Yeah, as I said, guys, I know I'm moving through this very, very fast. I feel like I'm moving through it fast because this kind of thing, you really have to sit down with these things written out, read them out, sit with the chart, and figure these things out. Because me telling you about it, you're not going to understand it 100% unless you're really solidified in your mind. So TPO and order flow. TPO stands for time, price, and opportunity. And this really is used by guys that traded on the CME, the Chicago Mercantile Exchange. And the guy that created it actually thought, what if I can actually see what's going on in the candle? And he created the rules for these, and he is actually still active on YouTube. So, and basically what the takeaways from TPO and order flow is don't be fixated on price. It's nothing more than an advertising mechanism that is used in the two-way auction process. So you got to think of an auction. When you go to an auction, and I think I used this example last week as well. In the beginning of the auction, there isn't a lot of buyers. All of a sudden, when the price starts going up and they see that other people are placing value on the car, then the bids start coming in, and it pushes up the price. So the more buyers come in, the more it pushes up the price. When it gets to the ceiling or the resistance zone, then the buyers are going to start coming out, and they are not going to be as interested in buying that asset because the prices are higher. So, and price in a market is exactly the same. So, in the start of I actually said there. I've actually explained what I've written out there. So the market profile allows us to see the process of what is coming in during the auction process, during that buying and selling process. And so profile doesn't tell you where to buy or sell. It doesn't tell you you should buy here or sell, but we employ the market profile to organize the data that is continually flowing, and we interpret the data. And here's really where that POC comes in. So where we drew the fixed ranges, your TPO software is going to draw the POC on a daily basis or on a daily chart every single time. So the wider the POC, the more likely the price is drawn towards it. It's also known as the fairest price to conduct business changes. Think about this. I'm selling below the fairest price of the day. It possibly won't work. And it's not a good odds to go and play out. So I use the ATAS software. It's free software for crypto, and they've actually got built-in templates. So if I go click on that little chart there, and I click on a TPO chart, and then you can go and search for BTCUSD. We'll select our Bybit chart. You'll see here that I can actually arrange the data, and it's arranged in letters. So these letters represent a day of trading. So you can see here the days trading opened. Okay, let me just do this. Come on, press the wrong button. So each of these rows or column represent a half an hour time frame. And you can see that they call this A period. Why? Because this is where the price, there's actually an O for the open. Price auctioned up and came, and you can see there's the previous day's POC. Just overlapped the previous day's POC and rejected, came down, all the way down, and A period, or the first half an hour, closed round about at 20,230. B period opened there, auctioned up, went all the way down, and you can see the yellow there is my value area. So if I go and condense that, you can see it actually tells me where the POC is for the day. So each of these half an hour candles I can actually see. And this for me tells me exactly what's going to happen when price breaks out here. Because if I draw a little trend line there, right here, I can see price has come and it struggled to get through this point. It tried to get through there, but it eventually, when it broke through there, you can see that we had a very quick run up to that $20,300 area. That tells me that this area is where the stop losses were actually placed. So, yeah, people were shorting here, and as price got through there, it hit their stop loss, entered as a long, went back into the market as a long, and pushed the price up. And yeah, we can see price is now trying to come back into this area here. So, and here you can see exactly like the fixed range, it's showing me where the value area high is. That's this yellow line here, and the value area low. So if I'm looking at this at an instant and I didn't have support and resistance levels at all, I would see that the middle of the range is not a good place to place a trade. So the best place to place a trade here, you can see once again, is at this value area high. So price came in, touched it once, twice, three, wicked through there, rejected, and it came down and fell through. So a good place would have been to take a short there, and possibly to take profit at the POC or even at the value area low over here. So that's the basics of TPO. And you can see I can actually expand the volume profile. So this is a TPO chart with the letters on the left, and there's a volume profile. So I've actually turned it on to tell me where the delta is. So this green, all of these greens means that the buys outstripped the sells, and over here the sells started outstripping the buys. And the advantage of this is I can see where all of the buys have taken place. So at this level, if I draw a horizontal array, when price came and moved below this area, all of these long positions would have been underwater. So what would have happened? they would have possibly placed their stop losses. Let's see. They probably would have placed their stop losses a little bit lower down, right in this area. And as the sales started coming in, their positions would have been liquidated and pushed the market down, going all the way down. Now, if we go and look at the footprint chart, you can actually arrange the data in a very, very ordered way. I can actually turn on my bid and ask, which is on the left hand side, is my bids, which is the sell, and the ask, which is the buys. And I can see at the top of this candle already, there's massive buys that have taken place here. So at the moment, all of these guys that have bought at the top of this candle, all of the guys and ladies, we can't exclude them, that have bought at the top of this candle are now underwater. So what's going to happen? As the price starts moving down, they're going to get further and further underwater, and they're going to reach a point where they can't go anymore. They're going to place a stop loss. So if I go and have a look here, they could have placed their stop losses below these candles here. You can see that's the most likely place they would have placed a stop if they took a high in this area. And those stop losses being hit, as longs are re-entering the shorters market, and that's exactly what we're seeing right now, moving down. And what happens is that this delta, you can see, is at minus 11 million contracts. The buys are at 13 million for this half an hour candle. The sells are 24 million for this half an hour candle. So, yeah, if I entered a trade here at this $20,800 area, this would have been a very, very good confirmation for me to stay in the trade. Why? Because there are a lot of longs trapped there, and it means that the price is going to move down.
There was one question from Dan asking what is delta, if you can just explain again briefly.
Well, delta is your buys versus your sells, and it just gives you the sum total of what the difference is between your buys and your sells. So yeah, you can see I've got a delta and a session delta. Session delta, it's just like a cumulative delta. So in this, here you can see the buys were at 11 million, the sells were at 10 million, so which means that your delta is 1.28 million in the positive. So that most likely would have pushed the price up a little bit further. Yeah, there you can see exactly. So there's
so it tells you the direction of the bias, basically.
Correct. So there's a positive delta. Pressure of more buys on the right-hand side, and these sells. Yeah, you can see these sells opened up at the bottom of the candle. So as price moved up, they were in trouble and they were underwater. Obviously, if they kept their positions open and they saw the price wasn't able to go above these areas, then actually, I'm going to turn off these stacked imbalances because it makes the chart less confusing. That is actually a little bit of a cleaner chart. Yeah, so generally, when you have a negative delta, you've got a candle going down. And I can obviously drill down to 1 minute, 5 minute, 10 minute, 15 minute, 1 day chart, but generally, these charts are used on a 30-minute chart, and you use them in conjunction with your TPO, in conjunction with your support and resistance levels. So you obviously know where your support and resistance levels are, and you use it in conjunction with your open interest. So what I would do when price comes down to, let's say, okay, let's change down to 30 minutes. I'm going to clean this chart up a little bit so that we can actually see what's going on here. Switch off that, switch that off, that one off. So for me, I wouldn't short at, I mean, this is completely in the middle of this range. I wouldn't short here, I wouldn't long here. And I can see this if I pull a little fixed range on the 15 minute. Okay, let's pull it from there. we'll see exactly where our value areas are. Okay, well, we're actually coming to a value area low here, but if we pull it to possibly that point, it will move our value areas. Yeah, there you can see. We're actually above a value area high at the moment, and it's acting as a support. If this breaks down, we'll probably move down to the POC, and we'll probably move down to that value area low again. So I would look at price. I would wait for it to get to the... Sorry, say again?
It's quite a nice move if that does break.
Very much so. So the best place would have been to take your short here. You can see here I've marked a 4-hour level, and we had a bounce off there. And if this value area high doesn't hold, we'll definitely have a move down to the POC. Why? Because that's where the most value is. Entering along, I would look at entering along possibly at this $18,000 area. If it holds, I'd go and look at my open interest, drill down. Let's see what open interest is doing at the moment. So price was declining, and we could see open interest rising. That means new shorts were coming into the market, which was pushing the market down. But we all of a sudden had a change in open interest that it went down. So that possibly means that the shorts were taking some profits. And at this point, we have a rise in open interest and a start of a rising trend. So you can actually drill down to 1 minute to see it a little bit more clearly. So here we had a change in open interest and all of a sudden an uptrend. But would I take a long here? Definitely wouldn't, because it is kind of at a point where it could bounce off here if this value area high holds. But yeah, I wouldn't long in this area. I would look possibly for price to come and break this area, retest, and we'd probably have a move down. My area for longing is there. My area for shorting is there. If I have bearish signs there, if I have bullish signs there, then you go and look at your when it comes down to these levels, you go and open up your footprint chart. You're going to have a look at what is Delta doing. Okay, we just started a new half-an-hour candle, and you can see immediately the Delta is still negative. You could take a trade here, but for me, this isn't a high probability trade because there's not multiple areas of confluence. The goal is to enter a trade where there are multiple areas of confluence, hence your charting your levels on the chart, charting your value areas, looking for the POC, charting your fibs, looking at your market structure and your patterns. So, and I know this is a lot of information. It's a lot of information in a short period of time. I could actually spend
I do think that
hours.
footprint software does need a little bit more explanation. So I do even think around 3 might be necessary because, yeah, as someone seeing that software for the first time, you know, all you see are numbers and colors and blocks and stuff, and it does take a little bit of time. I hope everyone will go off and play around a little bit, and then hopefully we can come back and actually reconvene, and yeah, you can go through it again. I mean, even just spend, you know, half an hour to 45 minutes studying that software historically. And what amazes me about that footprint is that you can actually draw, you know, resistance lines. It's been mind-blowing. I think there's so much there, and I don't know if everyone else is feeling the same as me, but yeah, I feel like a little bit more of a slow explanation might be
when I started out on this, I had exactly this, Jordan. It was absolute information download, and you can actually see on a lot of these charts. If I go and you learn to work with these, I can see exactly. This was a short that closed here and re-entered as a long, and the reason I can see that is because on the buy side, there was 167,000 contracts bought, but 0 on the sell side. That means that there was probably a quick wick up at that point. Let me just have a look there at 1,700. So if I go back to my normal chart on the half an hour. I'll look for 1700, and I can bet you it's this candle here. Yep, right there. Can you see there?
Mm-hmm.
So
it's all about using them in combination, the charts and the footprint. Okay. Absolutely.
So another thing that really works with especially these TPO charts as well, and this could be a little bit confusing, is you look for double tops and double bottoms. Now today there actually wasn't too many of them, and you trade what is called a swing failure pattern. Excuse me, not a swing failure pattern, a failed auction. So I'm just trying to look for an example here. Oh, yes, no, it hasn't. So the way that these TPO charts work is that if the chart is in like a complete bell shape, it means it's in balance. Here you can see a lot of the transaction was actually it was imbalanced. This is an imbalanced chart. It's very difficult to explain it in a couple of minutes, but
yeah, I can see that.
The biggest thing using these TPO charts is looking at excess and balance. So excess marks the end of one auction and the start of another auction. And I know this seems like higher grade stuff. Balance says that the markets are in a decent trading range, and the breakout of that balance is what provides great opportunity. So I can actually see in these charts here, this year, the fact that there was a big tail in that candle and it came down means that auction was finished and price was ready to go down. So if I looked at that, that's exactly what happened. We had price come wicked up to that $21,000 area, and we had to move all the way down to the other side. And literally, when I'm trying to find a failed auction.
Yeah, so I think we do have to stop off. I'm loving this. It's almost like we could just keep going because the questions keep coming in and you keep giving us info. So it's like we could do just like a 3-hour stream. But I think let's go away with this information. Let's come back. You know, everyone, please do go start playing with the software. I do see here someone is saying that it's not free. Israel Izzy, the software. Is there a way to use the software?
It's completely free. I don't pay for the software.
Okay, maybe I dropped the wrong link, so you'll drop it there for us.
Yeah, so I'll put the links in the document. So Atas is completely free. You have to register a free account for the software to work.
Okay,
and then you have a 2-week free trial where you can use crypto, stocks, indices, currencies, and absolutely everything. And after 2 weeks, that part of the software expires, but the crypto part of it continues. So you've also got to connect.
Yes, you said that's amazing. Yeah. Okay, so do go sign up, make an account. Even after the trial period, the crypto will still work. That's amazing.
Correct.
Yeah, no, that also was a bit confusing. Thank you.
Just one last thing. I was talking about the failed auction. This year, on this candle, is a failed auction. A failed auction is basically where you get literally 1 or 2 ticks below a previous candle, and this is a typical example. So that's not spread out. If you have a failed auction, that's like a double bottom, and generally, if you take the trade, you can take the trade all the way to the top of the value area. So I'll actually show you here. Failed auction.
Really
it looks very confusing, but if you get a failed auction, I normally take the trade because it means the price is going to go into the opposite direction. So these are actually candles. Let me just see if I can actually. Okay, I won't turn on the candles now.
So it's almost like a divergence.
No, not really. This has got so much to do with market structure and trading the structure of the market. So this is where the market opened on the day, at 12 o'clock our time, 2 o'clock our time in the morning. We had a failed auction there. That's like two half-an-hour candles almost wicking down to the same point. And this shows that there's not enough people wanting to sell at that point and that the market is going to reverse rather. And look what happened here. Price went all the way up, right to the opposite side of that TPO or that value area. So you could have taken a long when you saw this failed auction and went all the way to the top. So yeah, this software, once you start getting a clue of how it really works, it's incredible. So I've only really started touching the tip of the iceberg, and I've been using it for a couple of months. But the potential for this it's incredible. It's absolutely incredible.
It's so visual. It's like an X-ray.
Very much.
And I think, some of us who are very technical and like those kinds of platforms, platforms that are not, they don't dumb you down, you have to look at them, you have to read the numbers, you have to understand what's going on. That's what we're looking for.
Absolutely.
Sure. So I must just say thank you, Shawn. You're just giving us so much info. I think, let's hop off. A lot of us are probably a little bit exhausted from all the learning.
Sure. So, sorry about the information overload, guys.
No, it's much, much appreciated. And I think we must definitely have you back. We must even look at having a regular slot because this is just
awesome.
Wonderful. Yeah. So thank you, everybody. And thank you, Shawn, for
awesome.
Always all of your info.
Something I'm seeing here at this current candle. I saw a little wick here. We've actually wicked down to just below this value area, and that means that there's possibly a little swing failure pattern happening. It could be that this value area high is holding, and what I'm seeing here in the footprint chart is that there are a lot of sells. You can see there by the red. Those are contracts opening. You can see in this half-an-hour candle since it opened at 7 o'clock. We've had 10 million sells, and a lot of them have happened at the bottom of the candle, which means they're actually trapped. All of the shorts that opened up below this point here, they're all trapped.
Because they're FOMO shorts. It's not the best place to be shorting.
Exactly. So if we have a sharp move up here, all of those shorts are going to start closing, and they're going to re-enter the market as longs. And we actually could have a little move up here. So this is going to be interesting to watch.
Nice to see a wick there. Yeah, a little bit of support.
Yeah, absolutely.
Sure. Shawn, what an amazing session. Thank you so much. I know I'm definitely going to have to go and rewatch this a few times myself. So thank you.
I'll put in a couple of links of guys that I watch on TPO. I still watch them over and over to increase my learning. And just remember that your knowledge is cumulative. I actually put it into the document here. Charlie Munger, he's that famous guy's partner, Warren Buffett. He says, I constantly see people rise in life who are not the smartest, sometimes not even the most diligent, but they are learning machines. They go to bed every night a little wiser than they were when they got up. And boy, does that help, particularly when you have a long run ahead of you. And knowledge really is cumulative. So you've got to just add to your knowledge a little bit by little, And
don't think you know too much. If you can learn every day, then what do you really know?
Absolutely.
At the end of the day.
Awesome, guys. Thanks for joining. Really appreciate it.
No, thank you, Shawn. Yeah, and thank you, everybody. Verena, Wachima, Daniel, RMB, Victor, Ufuama, Steve, Israel, Lucas, Akalamo, Raul, David, Devolt, Davey, Jess, Des, Lindy, One Day, Ferdy, Nede, Crypto Cloud, Clement, Short, Diehard, Commitment, Long Stream. Thank you all so much. Appreciated. Let me just remind you to register for Wissart if you haven't already. Talk to me if you need a team. Let's get organized. And then, copy trading has been taking off. A lot of new principal traders coming in. So please do go have a look at that. Start small with your margins, but it is taking off. Let me know if you need help. And of course, leverage tokens, go and have a look. People are doing really well. There is also now a leaderboard on Bybit for leverage tokens, which helps you to understand which ones are doing well at which times. And yeah, let me know if you need any assistance. Remember, always play from a position of strength, use a stop loss, and don't get wrecked. Thank you, everybody, and thank you, Shawn. Have a wonderful evening further.
Thanks, guys. Give me a follow on YouTube, Zartrader Guy. I'll be doing little incremental videos on all of these things as well to really start expanding understanding. Thanks, guys.
Set the alerts also for the daily videos. I must say it's so nice to have when Shawn drops a video, you know, he's very diligent about doing his TA. He's always on it, and you can sleep easy, wake up in the morning, see an alert, go and watch his tutorials. And I mean, it's a constant learning process. So
thanks, guys.
Please do go follow Shawn.
I haven't done too many TA videos this week because I've had 2 sick kiddies, but I'll try and do some in the next couple of days.
Amazing. All right.
Cool,
thank you, everybody. Thank you, Shawn. Catch you on the next one.
Safe trading. Cool, man.
Good night.
Ciao, ciao.